All right, I am seeing 1080p coming out, 30 frames a second. I am sleep deprived. I'm excited. It's going to be a great evening when we go over this pick of the month for the first time, courtesy of All Star Trading Team. Really excited to bring you this, and really excited to hear what you guys think about this as well. You better not be cutting in and out, stream. What are you doing to me? I want to make sure that we're getting that consistent streaming going here. All right, guys, I'm excited here. We're doing our first all-star pick of the month. This can be either a swing play or a long play based on the rules that we've set. So we'll be doing this on the first of every month from here on out. We'll be releasing a nice packet of DD, a nice report. If you could see here, we have 14 pages of material to show you in this report today. We'll go over it in detail with you and show you why we think that this is going to be a good play coming up here. You know, obviously it's all speculation. You have to have a little bit of forward thought for all of this to work, but this one has great upside potential, and once you see it, you'll be a little shocked that we chose this one. But once we get into all the details and everything, you'll really see why we see this as a huge reversal play. So I have it up right here. This is our report sitting right here. I just have it up on the header. I figured we could hide it for a minute to kind of make it a surprise. All I have to do is kind of zoom out, and then you'll be able to see what our pick is here. So I'm pretty excited to do this. This is our first all-star pick of the month for August 2017. Ba-bam! We're looking at VRX today, also known as Valiant, also known as this huge dumpster fire that went from $265 a share all the way down to a measly $8 a few months ago. And I know what you guys are thinking. Have you gone insane? Trust me. After you look at some of the information that we are going to be bringing to you, as well as we're going to go over the entire history of what happened, you'll really see why we're looking at it more so at the upside rather than the downside. So I'm pretty excited about this one. I think that we have great upside potential here. So we might as well just dig into it. Let's dig our teeth into this. We're going to look at some of the metrics today. We're going to look at basic pipeline, since it's a bio stock, pharmaceutical stock. We're going to look at basically the entire history of what went down, why this thing dropped from $265 a share down to a measly $8. I mean, when you look at the chart, it's just staggering. You'd think, hey, this is a pump and dump. But this is really circumstantial what occurred here. And that's what I'm really excited about, the possibility of this huge reversal coming up. So let's just dig into it here. So as we can see here, our title right here, VRX shares, they've doubled over the past 3 months. They went from $8 all the way to hitting actually nearly $18 in just 3 months, which is pretty good turnaround right there. Now, if you look at the overall scheme of things, we haven't even cracked any of the price action to the upside from 263, but that is an amazing ROI just in 3 months, and I don't think that that's over. So we can see we have some basic information here just for you guys. Valiant International Pharmaceuticals, Montreal-based drug giant. Right now they're trying to dig themselves out of this huge debt hole. Midway through 2015, they were sitting on at about $250 a share. Actually, we saw $263 a share at their top, with a bright future. Previous CEO Michael Pearson, he went on this huge acquisition spree to really build VRX into what it was, buying just all the drug makers left and right, and then raising the prices horrendously. We're talking Martin Shkreli type prices, 500%, 1,000% on these drugs. Well, with the election coming around and everything, you'll see how this really broke down, but it really became a huge target. They really just put a bullseye on their back by doing stuff like this. Just to kind of keep us in the loop of the generality here, August 2016, we had our new CEO, Joseph Pappas. He came in to take on the huge turnaround for Valiant. Really, a lot of work for him to pull here, but he was turning heads because he was committed to get this debt down by $5 billion within 18 months. It says that we're ahead of schedule. Actually, we're about to meet the target and then some at the time of this post. And they have more non-core assets being sold on the way. So they're really cutting down on that huge bubble of debt right now. And really, it's going to mean a lot for their bottom line. So we can expect that they're going to be, selling more of these non-core assets in the coming weeks, which can increase the investor appeal here for VRX. So just some main key points here. John Paulson was appointed to the board. This is kind of like a stock fan favorite of people. You probably never heard of him. I'm not going to go into detail about him. Just know that there was a positive sentiment when he was brought on. And we had a positive tone for the previous quarter. It was actually a beat. And it really brought up a lot of investor sentiment towards the upside rather than the downside, that maybe the nightmare is finally over. And when we dig more into this report, you'll see why. Valiant reported adjusted EPS of 5 cents higher than the analysts expected, and also beat on revenue by $60 million in their last earnings. They also improved guidance, which no one was expecting them to be able to do. They thought, oh, they're just selling stuff. It's a one-off. They're actually improving guidance for the future as well, which is an amazing move for a company that's just dropped 95%. They have no major debt maturities and no mandatory amortization requirements through 2019. So they have breathing room for the rest of 2017, all of 2018, and 2019. That is amazing to hear. They have basically no debt that they have to worry about for a few years while they do this restructuring. They're quietly preparing to unroll more drugs in their pipeline. We'll look at their pipeline in a second here. And this could bring in more buyers. This can bring in more money, revenues, and at the same time, they're cutting all of that fat out with these non-core assets. It's really awesome. This is a much different company than it was 2 years ago. Instead of trying to buy up everything around it, it's actually going to streamline its business model and really worry about its core assets that really make Valiant an awesome behemoth in the pharmaceutical sector here. So they're not just selling these assets out of desperation either. Let's keep this in mind. They are selling these non-core assets at a premium. They're doing an amazing job of creating these opportunities for themselves with other companies to sell off these assets that are their weakest performing and getting their money's worth and then some on them. This is really great to reduce their debt and cut that bottom line. So we'll look at their major assets here real quick. We have Bausch & Lomb. This is their wildly successful contact eye solution company, valued at about $17.5 billion. They have their dermatology brands, their derma drugs worth about $6.75 billion. Then they have many branded prescriptions, including Salix, groundbreaking gastrointestinal healthcare, $11.8 billion. And they just kind of laughed at this $10 billion offer for Salix from a Japanese pharma giant, Takeda. They were like, really, well, we'll consider, offers for our core assets, but they're not going to take just anything. They would really need something that they're making a lot of money on it. They're not just going to cheap out just to try to sell something. Then they have their U.S. diversified products, massive OTC product line, includes Neuro, Generics, Solta, Obagi, $5.42 billion. So they have still, these are just their core assets. These are not the ones that they're trying to sell. These are the ones they're trying to keep right now. So here's their current pipeline. I mean, not a major pipeline, but at least we're seeing everything is at least in phase 2. They're working on hepatic encephalopathy, Crohn's disease, bowel prep for colonoscopies, and rheumatoid arthritis. They have this one under NDA right now, so they could be rolling these out by 2019, essentially. there is, you know, that tremendous upside when they bring these new drugs to market. If they get FDA approved and they get them out to the market, is really going to mean a lot for revenues. So now we're going to go into our metrics, and this is where I got excited because I'm a formula guy. First of all, what I also did here for our first pick of the month is I added in how we calculate each of these metrics so you guys can write down these formulas and have them. So first things first, gross margin. How many cents per dollar do they retain after cost of goods? So we look here, and typical gross margins are not this high, but they reported a 72.3% gross margin in their last earnings report. That is insane. We have some comparisons here, and we can see that pharmaceutical companies, they do have a large gross margin. Pfizer, for example, rated 80.67% on their last earnings. And we can see Novartis is another comparable 65%. Bayer's down at 57%. And then we talk about giants like Amazon and Apple, who are having gross margins closer to the high 30s here. Obviously, they have more in their manufacturing costs and things like that and advertising. But it's good to note that gross margin is a pretty big thing to look at because it's how many cents per dollar they're really keeping. You know, they sell the product and they have to make the product, so they have to spend money to make it. And that's how much they're making essentially back, is 72.3 cents per dollar based on that last earnings report. I do have the rest of the metrics here we can go over individually, but I really want to focus on this chart for just a moment. I basically took some of the competing pharmaceutical stocks and then just some other fun, more tech-like stocks, just so we can see some differences here in different measurements here. So we have our price to earnings ratio. Valiant is hitting a cool 9.195. The median average for the S&P 500, not while it's being inflated terribly, is about 15. So we really want our stocks to sit below 15, but not terribly below 15, but comfortably around that 15 PE ratio. When they start to hit 25 or more, that's considered pretty hot on the PE ratio. If they're hitting below like 5, then that's also concerning why people aren't paying per each dollar of earnings. So 9.195 is right in the ballpark of where we want to be with Valiant. You can see Apple's hitting 17, Bayer 19, Amazon laughably 214. So for every dollar of earnings that they put out, people are paying $214 for each of those dollars of earnings. It's pretty insane. Google 34, hot, but it's Google, so that's understandable. Nvidia's hitting 54, so that's something to consider if you're looking at Nvidia. They're starting to get pretty high up there in the PE ratio as well. And then Pfizer and Novartis are in the 27 and 30 range respectively. Then we have our price to book ratio, which we can see the formula here. It's just the share price divided by the book value of a share. Typically, you want these to be low. Lower PB can indicate that the stock's undervalued. So what we see here is we have Valiant sitting at 1.47. This is considered a very nice price to book ratio. We can see that even 5 is considered fairly high, which is where Apple's at. Bayer's at 4. Google 4.4, Pfizer 3.4, Novartis 2.87, pretty good value there. And then you got Nvidia and Amazon once again topping out huge. Next we have our PEG ratios, so we'll go down here so we can look at it. That's our price to earnings growth ratio. So that's essentially we take our price to earnings ratio and divide it by our annual growth rate. We also want this number to be low, as a lower PEG implies you're getting a better value for future earnings growth. So we can see here, there's actually several stocks that are hitting in a good range here. Google is one of them, Bayer's another one, Apple's another one, and Valiant. So we are hitting 4 for 4 so far. We don't have any other of these major companies hitting in the same regards to hit really nice levels. Next, we have the caveat, the unfortunate part of this chart is our debt to equity ratio. Now, remember, we're talking this debt is going to go down, but this debt is pretty much the biggest cloud over the head of Valiant right now, and that's why they're working so hard to reduce it. At a 9.59 debt to equity ratio, that's pretty staggeringly bad, and that's pretty much the main bad thing that we can say at this point about Valiant is how much debt versus equity they have. Typically, we like to see numbers underneath 1 because at least that means they have more equity than debt. Now we're talking they have 9.5 times more debt than they do actual equity. So there's still a lot that they need to do to increase the value and get that under control. And then next we have right down here. I must have skipped it. I lost it. This is price to versus free cash flow. So this is another one that you typically want to be low. It's considered a better value for investors if this is a low number. Valiant sitting at 3.19, awesomely low. Really crazy companies, I think like Lockheed Martin and stuff, they sit that low as well. Essentially, this means that there's a lot of room that this can grow still. Apple, on the other hand, they're sitting at 19, which isn't bad. Bayer's sitting at 16, which isn't bad. Amazon's still actually sitting pretty cool at 46, considering that their other metrics are pretty high up there. Google's at 27, and then NVIDIA, once again, hitting a flash here. It's sitting pretty hot at 73.3, and Novartis is actually pretty hot at 72.2. This doesn't necessarily mean that they're overvalued based on this metric alone, but it is just something that you should be considering as one of your metrics here. So we went over our PB ratio, we went over our PE ratio, we went over our PEG, and you can see that we really across the park for Valiant, besides that debt to equity, that's the only thing holding it back from being green across the board, which is pretty amazing. We have even a positive AAGR, even despite the fact that they posted a negative 91% for one of the years. They still hold a 5.995% average annual growth rate right now, which that's surprising. And one thing to note, even though Valiant's DE ratio is atrociously high, they are aggressively reducing that debt, and they've increased that shareholder equity by an estimated $2.5 billion since that first quarter, since that last ER came out. So they're really pushing it down quickly. So now we're going to go into our Benjamin Graham valuation. This is one valuation tactic that's out there based on a really old book, but it's hold tried and true to get an intrinsic value of a company. So essentially we get our formula here, and here's our different descriptors for the formula. Why we have 8.5 here, that's the average PE ratio of a stock with zero growth. G is the estimated growth over the next 5 years, so we can base that on the AAGR. R is the minimum required rate of return based on a strategy. I decided to choose 5% rate of return just to make it a nice, easy number. 3.87 is the current percent of the 20-year AAA bond yield. This will change day to day. When I originally posted this formula into my notes, it was at 3.87, so I kept it at 3.87, so it might be a little off now, but we'll roll with it. And then obviously the earnings per share. So we go here, we can see the earnings per share. You shouldn't take the last quarter's earnings per share. You should actually be going through several earnings reports and averaging them out. So I went ahead and did that with several earnings reports beforehand, and came out with an average of 142 for the earnings per share here. So if we do all the math, it comes out to a hypothetical fair value for VRX at $98.08 in 5 years. Sounds pretty great, right? Now remember that this is just an intrinsic value calculator. It's not really basing it on anything of the company besides a couple of values that we throw into it. But it is fun to speculate using this the Benjamin Graham here. So if we take that, if we divide it by 5 here, we get an average growth rate of 1632 a year. I found this really interesting because this brought me to a $32.78 or $32.78 fair value in 1 year. you'll see that this number is fairly close to what we'll be discussing later on. So I kind of found that interesting, and that I decided to include that research in here for you guys. So, and here is the price to free cash flow. If you guys are interested, it's an equity valuation metric used to compare a company's per share market price to its per share amount of free cash flow. A lower P to FCF can indicate a company's undervalued. Stock is relatively cheap in relation to its free cash flow. So that's why we want that number to be low. So we can see that we have our formula here. If you guys are interested, you can pause the video at some point and write it down. You can look up these different indicators if you don't know what they mean. But essentially that is what brought us to our 3.19 value here. So, I'm sure you guys are wondering, some of you at least, I know not everybody has heard what happened with Valeant. People are probably going, okay, so you're looking at a $260 stock that went down to $8. What the hell happened? Did it have something like Dries where it was just a pump and dump? What happened? So what we're going to go do, particularly for this stock, we're not going to do this for every pick of the month, but we're actually going to go through some of the history of this stock so we can understand and break it down for you guys, where it was, how the news detrimented it so terribly, and then when that news suddenly started to change. So if we look, just to give you a brief history here, 94, we had ICN Pharma, SPI Pharma, Virotech, ICN Biomedicals, and they all merged to make ICN Pharmaceuticals. They changed the name to Valeant in 2003, and then they merged it with BioVail in 2010. Now, this is where the story kind of begins. From 2010 to 2015, they acquired 16 pharmaceutical companies. 16 in 5 years, you guys. That's 3 companies a year they were buying. That's insane. You don't hear that from a lot of pharmas, big boy pharmas buying 3 companies a year. They had this aggressive growth strategy and found it was cheaper to acquire other companies than it was to invest in the R&D necessary to develop new drugs. Now, this works in a bull market. Don't get me wrong. They were starting to buy these companies in 2010 when the market was still considered relatively cheap to now. So to make those kinds of decisions at that time was very good, but eventually it catches up to you. You keep pouring money into it, and then the rate of return isn't as good, but you keep pouring and pouring until you run out of everything. So April 11, 2015, biosector in general was surging in 2015. So, we're already talking 5 years of growth from here, but it was still surging in 2015. That's why they still were making these acquisitions. And we can see in August, just a few months later, it peaked at $263. And that's versus our 5-year low of $8.31 that we're going to be hitting in 2017. So in less than 2 years, this thing dropped from $263 to a mere $8.31. So from January 2015 to August 2015, prices per share went from 143 to 261, 81% increase on such a large stock. Pretty insane to do in half a year. In September 2015, biotech start to drop because Hillary Clinton is responding to these drug price hikes. And remember that this started to become kind of a little war against these pharmaceuticals. These politicians started to realize that it's a good topic to talk about because it's for the people. And you can't see me air quote, but I'm air quoting. It's for the people. So, and they're coming out against this stuff. This is when the downturn begins, when Citrin begins to take focus on Valeant. Now, if you're not aware of Citrin and never heard of them before, I suggest going and doing some reading on them, and you'll notice that they're pretty prominent in what they do, and they have a particular strategy in mind a lot of times. But we'll get to it because I'm sure a lot of you have already heard of them. So September 28, 2015, they put out their first article about drug pricing in America, and they forged it to a single word: Valiant. So this is when they began to take that focus on Valiant to make them enemy number one. Democratic lawmakers sent a letter to chairman of the committee on oversight and government reform, the U.S. House of Representatives. They requested a subpoena demanding Valiant turn over documents it was withholding from Congress relating to massive price increases earlier this year for two drugs used by hospitals and other providers. So they were basically calling them out on these two drugs and the price increases that happened earlier that year. And they really wanted to hold these drug companies to account when they engage in these kinds of business strategies of buying these neglected drugs and turning them into these specialty designer kind of really expensive drugs, but they're supposed to be meant to save lives. That's why they're so cheap. So for these reasons, on top of the subpoena, the representatives also requested that the committee invite the CEO of Valiant to testify, along with Martin Shkreli, since both appear to be engaging in the same business model of acquiring potentially life-saving drugs to maximize their own corporate profits. I'm sure you remember that whole thing with Shkreli at that time. So Valiant was also kind of a sister on this case. October 2nd, a Citron tweet comes out. VRX, too dangerous to own, target 125. Now, we're talking October 2015. So we're looking at right about here. So it was still sitting at about 200 bucks. And they're saying price target 125. So they're looking out at about a 40% downside right now. You know, that's pretty scary. So Citron exposes what Congress will find if granted subpoena, and it's not pretty. Citron Research, don't bother Senator Sanders. Here's what a subpoena on Valiant would expose. Citron pointed out that Valiant raised the prices on two key heart drugs, Isuprel and Nitropress. You're not going to have to remember those later. They're not going to be on a quiz, but it's good to know. By 525% and 212% respectively, the same day that the company acquired the drugs from Marathon, so February 10th, 2015. The report further noted that at the first quarter of 2015, these drugs miraculously leapfrogged all of its thousands of other products. So these two just became their front runner sellers, largest revenue holders suddenly. Isuprel was Valiant's single largest drug in the first quarter with $72 million in sales, while Nitropress held the number 3 spot with $62 million in sales. So too dangerous to own. Citron went on to calculate the math. There were 89 days in Q1 of 2015. They owned those two drugs for 49 of those 89 days, and the price of the drugs went up 525% and 212% respectively during those 49 days. And the calculations show that just those two drugs netted an additional $86.95 million of revenue that flowed straight into its bottom line. And that was only during the 49 days that quarter. So that represented 8.5% of its Q1 2015 EBIT and 10.5% of Valiant's cash EPS metric. That's pretty gnarly. I know that was a lot of words and numbers there at the same time, but basically they bought these drugs, quickly raised the price hella fast, and those 49 days just instantly made them the most profitable drugs that they had suddenly. And we're talking about they had the other drugs on their pipeline, in their roster for years. So there's your answer, Senator Sanders, black and white. Extreme price hikes on these two drugs were the only reason Valiant beat the street on Q1 2015 estimates, avoiding a 9% plus earnings miss. This is what you see if you ever get the emails between the CEO and CFO. So that's when they set their 125 a share, and that was October 2nd. October 21st, Valiant shares plunged nearly 28% as Citron lowers its price target from $125 to $50. So you can see these guys are really gunning against them. Citron calls Valiant the pharmaceutical Enron, sees 60% downside. Icon has no position in Valiant, says wishes he was short. Valiant suggests short sellers are confused about business practices. Valiant falls below $90, halts, gaps up to 104. Valiant comes out saying the Citron comments appear to be an attempt to manipulate the market. Martin Shkreli tweet, I have taken a long position in VRX and shorted AGN as a hedge. Both companies have similar prospects and one is half the price. And then Ackman increases his stake because he's a big VRX fanboy until what you'll see later. October 26th, announces president of Value Act Capital to board of directors. So they're adding to their board of directors here. Martin Shkreli tweet, exited the AGN VRX trade, 3% loss or so, bad idea, onward and upward. So he was even going, hey, you know, things don't seem quite right. On the 30th, Valiant to terminate its relationship with Philidor. So Philidor is a name that came out during this whole thing that basically it seems like there was a bit of a dispute there, to say the least. Valiant names former Deputy AG Mark Phillip as advisor. Basically, they're saying, Ackman was saying this investigation will take 2 to 3 years to figure out, but life will go on for Valiant. Ackman was saying the investors have forgotten about the rest of the Valiant business. Bosch and loan business has been managed well, a respected brand name. Morgan Stanley and Bank of America do not feel that VRX dropping Philidor will have a huge impact. Well, November 2nd, Jefferies cuts Valiant target, but still sees 172 upside. Goldman downgrades Valiant, sees long road for controversial stock. White's Fund says no longer owns Valiant shares. So there's a lot of shares moving around right now as people are trying to figure out how bad is this yet. And we can see by November, we're already talking right about here at this $95 range. So we can see this is a pretty short period of time from August to November to have dropped already about 60%. November 4th, Colin McCaskill opened Senate investigation into the RX drug pricing. They have intention to hold hearings, and Jana Parker's letter states firms sold entire Valiant stake, took new positions in Miller Coors and SABMiller. Valiant fails to reach $100 on an intraday basis for the first time since September 2013. So AstraZeneca CEO says nothing has changed in partnership with Valiant. Bill Ackman to Valiant CEO, your reputation is at grave risk. Valiant shares trading down 16% for the day at $77.54 a share on November 5th. So just a few days later, they're already dropping even more. Then after that, December 15th, they announced new U.S. fulfillment agreements with Walgreens, plans to further extend distribution, reduce prices by 10% for all dermatological and ophthalmological products at these outlets. Valiant shares trade above $100 for the first time since December 2nd. Woo! Valiant shares trading pre-market at highest levels since November 3rd. Everyone's getting psyched. Oh, Walgreens, they're huge. This might be a turnaround here. And Valiant announces CEO Michael J. Pearson will be on the medical leave of absence with severe case of pneumonia. So things, you know, kind of got shaky all of a sudden. Whoa, the CEO's gone. December 31st, Amendment 13D filing from Ackman's Pershing Square shows reduced stake to 8.5%. So even Ackman's starting to go, I don't know. This is starting to get risky. January 6th, Valiant names Howard Sheeler as interim CEO. So while Pearson is in the medical leave of absence. February 2nd, recent Walgreens partnership will offer the 10% reductions on some of the popular drugs, up to 95% reductions for a large number of branded drugs. So Valiant says expect growth to be driven more by volume than price. Interesting statement from them suddenly. So Valiant issues statement on oversight committee releasing the docs. Before Valiant purchased NitroPress and Isoprel, it commissioned outside consultants to review the drug's pricing. Same thing from what Martin Shkreli said about the drugs that he priced up huge. Those consultants concluded that given the significant reimbursements hospitals received under bundled rates for procedures, the prices of both drugs did not reflect the true value to hospitals and patients. So hospitals and Congress feel the price is set too high, though. Valiant responded by offering volume-based discounts of up to 30%. in partnership with the Walgreens with the 10% reductions and up to 95% reductions for some of the branded drugs for which there's a generic alternative. So then we see Rodman and Renshaw comes in, initiates coverage of the company with a buy rating and target of 150. So believing that this whole thing is kind of an overdone mess, this is probably going to bottom out here, and business model still intact, and people are just kind of freaking out because they don't really understand what's going on. That's a fair point to make at that point. It really wasn't so true because it really was still on shaky ground. This, seems like there was some analysts that were trying to get ahead of it to say, hey, I'm picking this up cheap, so when it goes back up to 150, we can say we did it, kind of thing. So, they achieved that rapid growth over 7 years using that model of aggressive acquisitions and drastic restructuring and tax arbitrage. Current business model is highly diversified, relatively protected from patent expiration impact, and durable with retained cash flow generating capability. Yes, all true. But once again, like we said, their bottom line only really worked in a bull market with the way that they kept buying companies. If they were just kind of gliding, without the scandal and everything, if they would have just kept gliding, then yeah, they would have been, pretty risk averse. But they were still aggressive, and that's one thing that had to be kept in mind here. So he believed that the company had the ability to generate EBITDA of $7 billion in 2017 on sales of $12.7 billion, while growing revenues of more than $15.6 billion by 2018. Pretty ambitious there, but doable. 20-year contract with the largest pharmacy network in the United States, Walgreens. So that was a pretty good news for them as well. And in addition, Bausch & Lomb eye care segment has been growing rapidly. Valeant Pharma's gastroenterology franchise is expected to be able to generate top-line revenue of more than $5 billion by 2018. All great numbers. All of this kind of doesn't work where Valeant is when we talk about it now in 2017, but these were really cool numbers to hear back then, and that would have gotten some bulls kind of happy about it because those are great numbers. But the reality of the situation is this stock was in a death spiral, and there was nothing that could save it, not even one analyst price target rating. February 19th, Valeant has 42% downside and too many questions, title of an article from Wells Fargo. Valeant has not explained how the unwinding of a business that represents only 7% of its total revenue and is, according to Valeant, less profitable than traditional prescriptions, results in a 36.6% reduction in EPS. And this is in regards to Philidor. So their next EPS, or their next earnings, this is a small company to them apparently, but somehow it reduced their earnings per share huge. And Wells Fargo kind of found that really suspect, that hey, maybe not all these numbers that they're putting out are correct. Or at least they weren't before. So something was going on with Philidor. So people started looking at Philidor and thinking that maybe there was some accounting fraud going on over there. Valeant says $58 million of its net revenues previously recognized in Q2 of 2014 should not have been recognized upon delivery of product to Philidor. Valeant says correcting misstatements expected to reduce reported 2014 GAAP EPS by 10 cents and increase 2015 GAAP EPS by 9 cents. So they're changing their quarterly reports here in February 2016. Just adding to the stress of what's going on and all this controversy. February 28th, Valeant says FDA's received, NDA approval for a market generic version of Salix's Xifaxan. And CEO Pearson returns, will remove prior guidance. So we have the CEO back. March 1st, RBC Capital downgrades Valeant. Outlook visibility. Once again, another valuation cut from an analyst here. Longtime Valeant bull Jeffries cuts price target 40% as well. It's scary when you're hearing the bulls start to cut the price target. Then we have price near Citron's Andrew Left's $50 price target at this point in March. So it's been less than a year. It's dropped from 260 to 50. And Hillary Clinton's reporting, hey, I'm going to go after Valeant. That's awesome. You do it, Hillary Clinton. We all believed in you. March 15th, Valiant Pharma lows its year 2016 EPS outlook from $13 range to $9 to $10 range. So drops another 12% on these results in the pre-market. They're looking at the possible sale of non-strategic assets. Says investigation into Philidor. Counting continues. Concerns regarding that. CEO says changing tax reporting method at suggestion of SEC. So there's just a lot of moving cogs, really just making this thing look worse and worse. And as it's going into a death spiral, people are just thinking, well, when is it ever going to stop bleeding with this news just keep coming out about it? Shares go sub 50. A bit of guidance should have been around 6 billion, but they reported versus prior reported expectation of 6.2 to 6.6. So that dropped. Valiant shares have been free fall, approaching 5-year low. They breached $40 that day. So we're still in March, and they breached $40. Martin Shkreli says sees very fair value in Valiant at about $24 a share. And at that point, if we're looking at March, we can see it had this huge drop. Huge drop. It dropped to about like $27 that day, which is pretty crazy. So now we're looking in less than a year from 260 to 28, down 90% essentially. Rodman and Renshaw, they had $168 or $172 price target. They dropped it to $118. This is a notable piece of news. May 3rd, 2016, Joseph C. Papa assumes role of chairman and CEO of Valiant. So we're ousting the old CEO. We're getting a new one in. And then May 26th, they received a joint takeover offer from Japan's Takeda Pharmaceutical and TPG for that $10 billion for one of their assets here, and they reject. So that's at least one kind of seemingly good decision so far. August 9, 2016, Pharming Group acquires all North American commercialization rights for one of the drugs from Valiant for $60 million up front and $65 million in milestones. Then January 10th, 2017, they sell the Dendreon to SunPower Group for $819 million in cash. Valiant to sell Creavive, acne-free AMBI skin brands to L'Oreal for $1.3 billion. This causes shares to jump up to $18. Announced the sale of Dendron. They sold all these, and essentially they made $2.1 billion out of sales. And after that, March 6th, Valiant completes approximately $1.1 million down payment on loans from the divestures. They're looking to seek refinancing, an amendment of credit agreement, and Valiant commences cash tender offer of up to $600 million outstanding principal amount of its 6.75% senior notes due 2018. March 10th, 2017, they boost that tender offer for 6.5% 2018 notes to $1.1 billion from $600 million. Valiant also to pay down $300 million in revolving credit. So they get lender consent for refinancing, and now we're really seeing the beginning of that turnaround here. So that's why we have this marked, the turnaround. Bill Ackman is out of Valiant, March 13th. He sells his Valiant stake, steps down from the board, plunges 14% on this news. I mean, Ackman's jumping out. He was the biggest bull around. So that really scared people that he was jumping out of all people. But it turns out it probably was for the best for the company here. March 21st, Valiant Pharmaceuticals. Amount of debt maturing before 2020 is substantially reduced. So they started reducing that debt before 2020 in March. And we see now, like we said earlier, they cleared that up. Nice news, Bausch & Lomb. They received 510 clearance from FDA for one of their vision enhancements. April 21st, Valiant's Patient Access and Pricing Committee announces pricing for one of their injections here, $3,500 a month. Lowest injectable biologic psoriasis treatment currently on the market. So this is something that sales and marketing began during the second half of 2017. something that is going to go into revenue in the second half here. Orexogen, if approved, Valeant will market and distribute Contrave in Canada as part of its distributed agreement with Orexogen, executed in 2016 of August. It was filed by affiliate of Valeant Pharmaceuticals International, April 25th. Bausch & Lomb gets another 510 clearance for another really cool thing. Then they announced May 1st additional debt reduction of another $220 million. Valeant pays down unscheduled debt payments. May 9th, they report an EPS of $1.79 versus a loss of $1.08 same quarter last year. Just a net income of $273 million, sales $2.1 billion. Raised that EBITDA outlook, and people are really excited about that earnings report because that was the first earnings report where you could actually see some improvement. They're not just bleeding. They actually have something going on now. Positive litigation developments on the 11th caused another 8% jump in the stock. June 8th, they announced the sale of Inova Pharmaceuticals for $930 million. Who the hell is Inova Pharmaceuticals? We didn't even see them in any of our research before, but they had it there, and they sold it for nearly $1 billion. Great. Let's pay down that debt. Valeant proceeds to permanently repay term loan debt under senior secured credit facility. Mag Tyrrell tweets, VRX CEO sells, tells me Inova deal will get VRX to $4.5 billion in debt paydown since Q1 16 of $5 billion goal by February 2018. So they are already almost there, and it's not even close to 2018. So we have our largest shareholder as of June 19th, 5.6% stake. Bausch & Lomb named most trusted contact lens solution brand in Canada for a second consecutive year on June 22nd. Then we get some filing acceptances. They launched those contact lenses. July 10th pays down $811 million secured term loans. July 13th, it's redeeming $500 million of its outstanding 6.75% notes using cash on hand as it continues to work on its debt burden. They really started to turn it around. They started to reduce its debt by more than $4.8 billion since the first quarter of 2016, on its way on its track to paying down the $5 billion within the 18 months. The company has no major debt maturities and no mandatory amortization requirements through 2019, and I mean it's great. Joseph Papa comes in. He's the big Papa. He's making sure everything's getting paid off. July 17th, Valeant to sell its Obagi Medical Products business for $190 million cash. PT raised to $19 by Deutsche Bank. Most recent news that we have. So we just had so many sales go on in 3 months. So instead of buying businesses, they're getting rid of all these extra businesses that they don't need to get rid of all this debt that they don't want as well. Now, obviously, the biggest potential red flag here is for the near medium term future for VRX. Could be some patent expiration, considering that they're going to have a smaller portfolio at this point. Patent expiration could have more of an impact. And for some of their OTC drugs especially. If there's more litigation in the news that it's considered negative, then that can also be a factor that you need to keep in mind. Constant trashing of the VRX in the mainstream business media community has slowed considerably since Bill Ackman got rid of all of his shares. He sold it for a $4.6 billion loss, if you can imagine that. So if you see any news on the sale of VRX largest assets listed above, you should pay attention to the terms and details, because that would be a big thing, because they're really trying not to do that. But be on the lookout over the next few weeks for VRX to make additional asset sales, news on the new drugs in VRX's pipeline. So we don't have a lot of bad things to say about VRX at this point. They got rid of a lot of the bad things for us to say about it already. It's just the fact that the bad things that are there do carry a lot of weight in the situation still. So we do have to be very mindful of it. Overall, though, you can see that we went from this company crashing, and you can see through the news that we read how it crashed, to possibly this one little candle here that has a BB crossover arrow for the first time since its drop. Might be our indication that, hey, this might be our final reversal here. Things are starting to finally pay off. We can see our earnings, previous earnings for reference right here. We can see that we had that nice earnings on Q1 17, which leads us to a possibility of having interesting earnings for Q2. And brings us to our final speculation. Rolling through all this information, got through it, 50 minutes. I'm probably bored some of you. Let's get to our final speculation and our price targets and our time frame, what you've all been waiting for. So we're looking at a potentially huge return on this ticker. There's a lot of evidence here that this company is going to be on its way back up. Maybe not to where it was, but stronger in a lot of ways, where it has a stronger core business model that's really going to attract investors again. Now, I ran it through my customized formula here for creating valuations. Now, this kind of does work like the intrinsic value calculator. Like, for example, this was at $200 something a share when it was saying $23 a share. It very well could have actually been worth $23 a share at that time, but through all of the pumping of the stock itself and things like that, that could actually be its true value. Obviously, this quarter, we couldn't have a negative $10 valuation. So this does still have some flaws in it, and I am working on it. What I found interesting, though, is we went from all of this red, and I'll zoom out here so we can kind of look at the whole chart. We went from all this red, 2015, 2016, 2016, to hitting Q4 2016, and actually being around the value of what the stock was. Price the week before, ER was at 16 bucks, and it dropped down to the low of week of 12.90, which is right around our valuation. This is really cool to see that instead of seeing a valuation on the price per share 10 times higher than what the numbers were getting, now we're finally getting something around our ballpark. And more interestingly is when we threw in our Q1 2017 numbers, it threw our price per share up to $33.48. Now, remember earlier I said, remember that valuation that we did earlier, that in 1 year it would be about $33 per share. Once again, we had that number come up, and I found that to be pretty interesting because it coincides with the chart so well as a pivot that is our first price target here that we're looking at. After running the numbers, we're estimating an initial price target here of $33. Now, mind you, we're talking about a stock that right now is trading $16.75. So we're talking nearly a little over 100%, and our time frame is about 6 to 9 months on that. Best case scenario, if this pushes even harder, if they really get this thing streamlined and pushing the way that they are now, really get that so the core assets are making their money, they could see true recovery going into maybe Q4 of 2018. But in this scenario, it's not impossible to speculate price target $57 in about 15 months. Very doable. Basically, our two huge pivot points on the chart here, though. As you can see, our first one is about $33. If I zoom this chart out to even a 20-year view, you can see where we have several points where that was a pretty prominent number. And then once again, our second price target, $57, is also a very prominent pivot. So that's why we chose these price targets based on historical pivots here, as well as we got valuations for around $33. So it's not unfeasible to see that in 2 to 3 quarters as the price tries to catch up. This is only Valiant can keep up this style of liquidating non-core assets while successfully developing the pipeline, though. So if they can get rid of all of that fat and then really focus on their main pipeline and developing these drugs and selling them, then this is definitely doable. It's also worth considering a position going into earnings. Now, this is something I really want to bring up with you guys. We have earnings on the 8th, and I am speculating that we're going to do fairly well. We're estimating that this could be an easy beat for them. And right now, based on MaximumPain.com, I don't know if you guys have ever used MaximumPain.com, but you can go on, you can basically see the contracts for calls and puts on a nice simple graph with the prices here for different time frames. So this one is expiring on the 11th, and we can see that there are a lot of calls being bought right now in the low 20s up to $23 range. And then even for the maturities on August 18th, once again, we're seeing $22 to $30 being way higher than the puts are being bought here, which is basically kind of saying, hey, you know, options traders are kind of looking at this as a potential huge moneymaker as well on the upside here. And I would agree with them, considering what reversals they've done and how this chart is moving as well. I could definitely see that this could have a nice beat, and we're estimating that this could hit as high as, you know, $23 to $25 a week or two around this beat, if it's as strong as possibly speculated, which does actually go in line with this $23 candle here. You can see that this starts to not really taper off until about 28 here, but 23 kind of seemed like an interesting number as well on the option trading side. So two separate figures kind of bringing the same price range together, I thought was interesting as well. So earnings could be very interesting. If you're a little bit more risk averse, obviously it's probably better to wait until after earnings are released, because it could obviously there could be downside as well. Maybe the earnings aren't going to be as great as we think, and the stock tanks to 12 bucks. That could be a great time for you to jump in. So all about how you value your risk strategies. But overall, this is our all-star trading pick of the month here. First one ever out, and I think it is a doozy. I think that this one is going to be very interesting and awesome. Special thanks to Brother Monster and Brandy. They helped contribute to this report that we went over today. And obviously, should look at this as not trading advice. This is entertainment. These are our ideas for entertainment purposes, blah, blah, blah. Disclaimer right there. I just disclaimed all of you, so we're all good. I hope you guys enjoyed this. Tell me what you guys think. Do you guys think VRX is going to be a big winner? Do you guys think that this is just a whole bunch of tomfoolery and this is going to drop to $5? You know, we're on the live stream now. I'll throw this video up. You can tell me in the comments. You can tell me in our chat room. If you're part of the All-Star Trading Team chat room, it's a great place to be. Lots of like-minded traders making great calls every day. And if you're not part of All-Star Trading Team, obviously you can, comment on our video here, or you could even visit our Twitter page, which is in the description of the video. Follow us on Twitter, and also hit us up on Twitter. We'll hook you up with a free week to join our trading room for, just to check it out, see if you like it. We got some cool people there. Maybe you'll find some cool friends to hang out with and trade, and you'll love our trading room. You'll never want to leave. So don't forget also to like and subscribe this video. Share it with your friends. Let's find out what they think too. I like to hear everybody's opinion. At that point, that's all I got for you guys. I'm really glad you guys all sat with me today for our first All-Star pick of the month. So excited. I'm finally glad that we got it out there. Haven't slept in 2 days, but it was all worth it for you guys. And I hope that this is going to be something that we can make immense amounts of money on. Thank you once again, everybody, for sitting in. This is Andrew, and I hope you guys all have a great night. Until next time.